You're listening to Seattle Real Estate Podcast.
Welcoming Mr. Dan Chapman from Fairway Independent Mortgage. Dan has been on the show a number of times. Dan is our mortgage specialist, consultant. What's your title,
Yes.
Dan?
I don't know. Loan officer, mortgage advisor, something like that.
You're the guy that knows interest rates and
Yeah.
how to get people financing,
Right.
which is a critical task in today's market.
Yes. Yes, it is. It's good to be back.
Yeah, thank you for coming on. The big topic that I think we're hitting on today is how long can these interest rates remain
Yeah.
as low as they are? So what are you thinking? What are the other experts that you're following?
Mm-hmm.
What are they thinking? Give us a little bit of background.
I listen to a lot of people, but the number one is the expert is Barry Habib. So I listen to him every day. I get a video every day and synopsis on the website. And, we had some pretty bad inflation last numbers to come out for, April in the first quarter and year over year inflation last week. So rates took a little bit of first off, rates went down a little bit over the last month. And then last week they went up about an eighth because of the inflation numbers. So they're still phenomenal. I mean,
they're still hovering a little over 3.
They're right about 3% on a conventional 30-year fix.
Okay.
It's phenomenal still. So I would expect, most likely with inflation numbers, depending on how the severity of the inflation, but it seems like it's going to keep going, the inflation, that we'll probably see them jump up a quarter to maybe 3/8% by the fall. So by, let's say, October-ish. We might be 3.25, 3.375. And I think by the end of the year, maybe they'll settle about 3.5, 3.625 by January of next year or the end of December of this year.
Okay.
So we'll see. It's going to be interesting. That's what I would say is probably going to happen.
Okay.
There's always some unknown factors that can come into it. But if you keep hearing inflation, you keep getting the inflation numbers that we're getting like we got last week. Highest inflation in 13 years, year over year last week. And then if you strip out the food and energy, it was the highest in 39 years.
But that's also when you've taken an economy and shut it down.
Yeah.
And then you're all of a sudden, hey, boys, let's go, boys and girls.
Boom, everybody coming back in.
Exclusionary here.
Yeah.
Let's go. And then now you're starting to see some of those impacts.
Yeah.
So I think what you're talking about probably is right. You're going to see a kind of a ramp up. And then it kind of levels out. That's kind of what I'm hearing.
Yep.
But definitely probably higher interest rates. Just a matter of how high they go. And the Fed is still committed.
To keep him down.
Yeah.
Yeah. They're still going to pump money into the system to keep him down and whatnot.
What are they purchasing right now in mortgage-backed securities?
I think per month or per day.
I think it's on a per day basis.
Yeah. I think it's in the 20 to 25
billion.
Yeah. It's a lot. It's a lot. They've tapered a little bit, but not, because they have to eventually. Yeah. But it's enough to where it's keeping rates from jumping up to like 4%, Right. So they're definitely manipulating it. And
so we've got that inflation going, and then we've got the Fed kind of still keeping its foot on the accelerator as far as trying to keep the economy going, keep those rates low. Yeah. So you got a couple of different forces there that are going.
Unless you're Janet Yellen, then you're flip-flopping on that. But
that's to be expected.
Yeah. So, I think next year it's going to be real interesting when we go into next year and see where rates are at for the full year. Like, where will they end up? Will they end up at 3.5? Will they end up at 4? Before COVID hit, I think the going rate in, say, February, March of 2020 was about 3.75, 3.875. Yeah. So I think we'll probably end up back there. Yep. Maybe by the end of the year.
Kind of full circle.
Yeah. We'll see.
Full circle.
Yeah, which is still good, and people will still be we're not going to be doing many refinances, but people will still be buying homes at those rates.
Yeah, the refi market. Go away.
Yeah, it'll slow down. But a lot of people have a ton of equity, so there's that cash out too. So
right, and people are moving. People are they're flat moving. They're doing a lot of activity. Yeah, and we've just got this crazy real estate market. There's that demand, and what we're talking about right now is, the interest rates on top of the demand. Yeah. Just making this market go.
The exodus from California and places like that have been tied down from COVID, from the governors and whatnot, they're leaving. Right. They're going to places like Arizona, Texas, Idaho, Montana, Florida, you know.
And are you actively seeing that in your business? Seeing people?
Oh yeah.
On the daily?
Yeah. I mean, I just got licensed in Arizona because I bought a house there. And so I got licensed there. And it's just, even my agent, like, she's like, it's almost 65% of the people I'm working with are from California.
Crazy.
Yeah.
Yeah.
People can work remotely now.
Right. Right.
You know, so there's no that issue. I can, like, I'm doing a Microsoft guy's loan. He moved from Redmond to Phoenix.
And we were talking about that before we got on here, is that you are, so I'll give the listeners and viewers just a little bit of background on Dan. You're a Kirkland guy, Kirkland, Washington, where the Rona started.
Yep. Yeah.
Whatever that life,
nursing home is. Right.
Rona started there in basically United States.
Mm-hmm.
And then, so you were a Kirkland guy down to California.
Yep. Lived there for a while.
And then Whitefish, Montana.
Yep. Now I live there.
Got a house there. Yep. And now you've got another place in Arizona.
Yep.
And so you've hit all the hot spots with the exception of California.
Yeah.
But
I'm not going back to California.
Yeah. That was a wife
California.
move.
Yeah. So
there.
we'll just be in Phoenix 2-3 months out of the year. And you know, that's
so you've got all the major markets pretty much covered. Yeah.
Now I'm licensed in all these states, and I even lived in Colorado for a little bit. So I'm licensed there.
Okay. And so you are actively seeing you're on the front end of things where people are going to. And we had talked a little bit about Whitefish. It's a resort town.
Right.
How big of a town is that in Montana?
So year round, on average, it's about 10,000 people.
Okay,
in the summer,
small.
it triples.
Oh,
because you got a lot of second home people.
Okay.
And the Canadians, they own a lot of real estate there. Of course, they can't come in right now. But
okay.
Yeah. So it's really booming in the summer.
And you have seen a big influx of people move in there.
Yeah. Just in my street alone, 2 or 3 families from California moved in, one from Arizona, one from Utah, all within the last 6 months.
And we were kind of talking about some of the reasoning as to why and how does that make sense. And the big one was people want kind of more freedom.
They want more freedom. They want to be able to go out to eat, you know, like when California and Washington, you know, Seattle, LA, San Francisco or whatever were shut down and you couldn't go out to eat unless you could eat outdoors in the patio, right? But you couldn't eat inside. Whitefish and was always open, you know.
And what were your COVID numbers like?
Not too high, not bad.
Well, you don't have the population.
No, there's just not a lot of people. I mean, in the summer, there's a lot more people, but they're I don't think they were really that bad. Like recently, I asked my neighbor who was a nurse if you had any COVID patients in the last couple months at the hospital, and she's like, "No, we haven't had one. We haven't had COVID patients for couple months at least. And I think she said like 90 plus days.
Wow.
And that was in April when that conversation took place.
Okay. Yeah. So a few months ago, even still.
Yeah.
Last month, I guess.
Yeah. I mean, there's some people that get it, but they just don't get sick enough to go to the hospital most of the time.
Okay. Because there's just not that many people getting it.
But Flathead Valley, which was before COVID, about 110,000, there was like 40,000, 50,000 people that moved in the Flathead Valley in the last year. So now it went from like 110 to like 150. That's what I read in the local paper. Huge increase. Yeah.
So some of that is going to be due to people wanting more freedom and that kind of lifestyle.
Sure.
A lot of it has got to be they're Microsoft people, they're Amazon people, and they can work wherever.
Yes.
Because they've got the income to be able to afford a Whitefish type town and they can work wherever.
Yep.
Whereas that didn't used to be an option.
Yeah. And it's driving prices up. You know, as you can imagine.
Yeah.
Because there's still a little inventory everywhere in the
Where
United
would
States.
You fly into Whitefish?
Kalispell. It's 12 miles from my house, the airport there.
Okay.
Kalispell Airport.
Okay. So is that a major airport?
Yeah, it's an international airport.
Okay.
Yeah.
Okay.
I mean, it's there's no TSA line, but it's a major airport, you know.
Interesting.
I show up there before my flight, 45 minutes before my flight leaves and walk right through TSA. It takes me a minute.
That's wild.
Yeah.
So people are wanting that as well. They want to kind of get away from all the nonsense from the big cities.
Yep.
And, you know, we've seen that in downtown Seattle. It's so obvious that
it's crazy.
People do not want to live there.
I read that appreciation the other day. Maybe it was about a month ago, year over year in Seattle. The equity appreciation was only 4%, whereas the east side of Bellevue, Kirkland was like 30%.
Yeah, wildly different numbers.
That's insane.
Yeah, it's where people want to live.
Yeah.
And it's where they're moving from.
Yeah. They want to move out of downtown Seattle. They're moving to Sammamish. They're moving to Redmond.
outerlying suburban areas because they can.
Yeah.
Now, what I question is how much will that change when a lot of these big companies like Chase are saying, we need you back in the office. How much will that change? And granted, that's a finance industry.
Right.
Whereas some of the tech stuff like a Zillow or an Amazon or Microsoft, those guys, upper level guys can probably work from wherever.
Yeah, they got to be productive, right? So if they're productive, then that'll stay. But I think that we're going to see once, if hopefully we get out of this and it's all back to normal, pretty soon, that we're going to see some of that change things a little bit. But I think a lot of companies will say you can work remotely, especially like you said, if you're tech. I've been working remotely for years, so nothing changed for me.
Yeah.
Yeah.
Yeah. There's so many people that are in that boat. And I think they've realized, okay, so I can buy a bigger, nicer, newer house. It's further out, but it doesn't matter because I'm not really commuting anywhere.
My brother, he does what I do. He's a mortgage lender as well. He moved to Snohomish. He's just like, I got to get out of here.
Suburban community to the north.
Yeah.
And I was in Snohomish yesterday, and it's probably what? Is it a 40-minute drive from downtown Seattle?
Probably, yeah. That's about right. Yeah. So from Kirkland, it's about 30 minutes.
Right.
25.
I was coming back from Snohomish at about 2:30 yesterday afternoon. Traffic going there, horrific.
Traffic going into the Snohomish?
Into Snohomish, horrific.
It can be bad.
So
what's that highway that goes through Woodinville by Echo Lake there?
522.
That can be nuts.
Horrible.
Yeah.
So I think you're starting to see some of that commuting getting back to normal.
Yeah.
Because people who can't do the work remotely.
Yeah. I mean, I noticed that just driving around Kirkland Bellevue the other day.
More traffic.
The last few days, I should say.
Yeah, there's more traffic.
It's like last time I was here, it's a big difference.
Okay, and the last time you were here was like last November.
Yeah, through early December. Yeah.
Yeah. Okay. Yeah. So you get a kind of peek into seeing, all right, what's going on with the Seattle metropolitan area.
Yeah.
And you're just like, hey, there's a lot more people driving around.
Right.
Yeah. So you're thinking interest rates go up to maybe 3 3/4
by the end of the year, maybe 3.75, right around there.
Okay. Is that what other experts are thinking as well?
I think a lot of them are pretty close on that, on their opinions. They're usually within 0.25% on their opinions. I always look at what does Fannie Mae forecast? What does Freddie Mac forecast?
Yeah.
Barry Habib, Barry Habib's won the Crystal Ball Award, several years out of the last. He wins it almost every year.
He's kind of just one of those guys in the mortgage industry that people trust.
Yeah.
His opinion.
Right.
Because he has pretty.
Yeah. He knows how to look at the technical charts, like the mortgage bond charts and tradings and the 10-year treasury and all that, and analyze it to a technical data. So to where you if the layman looks at what he's saying, they're going to be like, I have no idea what he's talking about.
And then when you send me his stuff, I'm like, Dan, what does this mean?
Yeah. Lines of support, lines of resistance, Fibonacci level. What does that mean?
I have no idea. Dan, what's the interest rate right now?
Yeah. Yeah, it's interesting stuff. I like it.
So how long do you think, you've been doing this a long time?
20 years.
Yeah. How long do you think this market's going to run in all these major metropolitan areas, which are just going? How long do we go into 2022 pretty strong?
I think a lot of it just depends on the inventory. Are we going to get more inventory? The other part is rates, because people are scrambling a little bit. I just bought a second home and 3-4 months ago before rates went up, I could have got, 2.6, 2.7 on the second home.
Yeah. Well under 3.
Yeah. Now I'm just a hair over 3%, which is still fabulous.
Yeah. Anything under 5.
Yeah. Yeah.
Is historically.
Yeah. So it just depends where rates are at, but let's just say they're under 4%, but we get a little more inventory. I think things will slow a little bit. This appreciation has got to slow down. It's not sustainable.
No.
It's hyper inflation in the real estate market.
Yeah.
I mean, even in Whitefish, Seattle, Phoenix is that way.
A lot of these smaller markets are 15 to 20% appreciation.
Boise is nuts.
Yeah. Areas with little supply are just getting pounded. Because there's lots of buyers that are like, hey, I want to live there.
There's 40 million people in California. And if you just throw out a number and say, hey, 1 million are going to leave in a 1 year span, California, granted, there's always people moving in, but let's just say 1 million are going to leave. That's a lot of people when there's very little inventory. in the West Coast. If you're just talking about like Phoenix,
but nobody wants to live in Cali.
Yeah, no, the U-Hauls their U-Haul companies are busy there.
Going the other way, kind of like New York City.
Yeah, they want out.
Yeah, and that one makes total sense. In California, for just all the reasons that we all kind of are aware of.
Yeah,
state income tax, quality of life.
Yeah,
just expensive.
Yeah, I mean, I like for you, Sean, like we've been doing this for a long time, and we've seen from, say, in the Seattle market, let's say from 2015 to now, we had a little slowdown in 2018 with appreciation, but 15, 16, 17, 19, 20, 21, just, I mean, if you'd have told me in 2017 that prices were going to go up another X amount of percentage over the next 2-3 years instead of your average, say 5%, I would have been like, no, I don't think so.
Yeah.
But it's happened.
Yeah.
So,
and so let's go back to, we covered interest rates. Let's go back to supply.
Yeah.
What, in your opinion, is going to create more supply? Are we going to have sellers come out of the woodwork? I'm okay with people coming through my home now.
Yeah.
I think we've already seen that.
Yeah, that's already, people are for the most part okay with it. I think a lot of the problem is sellers are like, they got the equity so they can sell and they can make a lot of money, right? And walk away with that.
Or they wait just a couple more months, Dan.
Yeah.
And they just keep waiting.
Yeah. I mean, I think we'll see a little bit of a slowdown here, August, September, maybe July, August, just because it's summer months and people are busy. But maybe we get some more inventory after that.
But there's no supply.
I know. So what are you going to do? So you got to buy a house.
Yeah.
So if you're selling and you're going to stay in the Seattle market, you're not leaving the Seattle market, it's really tough. But if you're going to leave for somebody like Phoenix or wherever, right?
That's a home run.
Yeah, yeah. Because you're moving from one market that's really expensive to a market that's not as expensive.
To a hot market, but way less expensive.
Yeah, like there was a TikTok video that went around. You see the guy with the apple, the real estate guy? It was really funny.
Yeah. No,
really
I posted that.
I
posted that
hilarious.
on Facebook.
Hilarious. And the guy's talking about the apple, and the apple represents the house, right? Yeah. Hey, I want that apple. I'm willing to pay $3 for that apple. And this guy at the very end goes, I'll give you $10 for that apple. I'm from California. That is a cheap apple.
Yeah. Yeah. Can I see that apple?
Yeah.
No, that's not how this works.
No, yeah, that's not how this works. That was very creative. Very creative.
Yeah, that was a great video. It really exemplified our market, which is sellers are in the complete driver's seat.
Yeah.
Yeah.
Yeah, absolutely.
And so will that change?
I don't see it changing anytime soon. I just don't.
No.
I don't know about you.
No.
We've had some inventory problems for quite a while.
Yeah. Going into the Rona shutdown, we had major supply
we had
issues.
a 1.5 month supply going into Rona, maybe 2 months.
And now we've got 2 weeks.
Yeah, now we got a 2-week supply.
And that's basically that. And I tell people that is sold out all the time.
Yeah.
So the only stuff that's on the market is junk.
We need lumber prices to go back down, man. I mean,
and that's not going to happen.
That's just, I mean, we need builders to be able to build and bring more supply on the market.
We talk about that all the time. Builders, it takes so long to put a development together that stuff, whatever's in the pipeline's in the pipeline.
2 years from now.
4 years from now.
Yeah, it could be.
By the time they get it up and done.
Yeah, with some of the red tape in certain markets that you got.
Yeah, people always talk about builders need to build more. Well, they've needed to build more since 2008.
Yeah.
That's not happening.
Right.
So where's it going to come from?
Right. After that first housing crash and the big housing crash in 2008, for builders to get back on their feet and get money and
for lenders to want to lend
to builders. Yeah. Yeah.
Hey, you want to take a risk on a builder? Not really.
Yeah.
You just lost.
Yeah. Millions.
Entire companies went under. We lived through that.
Yeah.
Like, are they still in business? Can they? Yeah. No, they're not in business.
Yeah.
They're not lending.
Right.
Remember that?
Yeah.
Well, how about at the beginning of this Rona shutdown, you basically lost all jumbo lenders.
Yeah. Yeah, they shut down jumbo lending for 60 days probably.
People are freaked out.
60 days. I mean, we had one of our best jumbo investors who we lock a lot of loans with just pull out from underneath us. And we had to shift those loans to other, some of the big banks and things like that and take a haircut on them, So our CEO,
that was scary stuff.
Our CEOs, like when they wanted to get back in the game, and they are back in the game now, but it's like, okay, you're going to sign a contract that won't allow you to do that to us again. basically.
So if we play ball with you, this is how the game's
this is
go.
This is the rules of the game now. Because
Right.
I'm not taking a $200 million haircut like we did when we had to sell all these loans.
That's crazy.
I mean, fortunately, we have a lot of,
we
do a ton of business.
liquidity.
Yeah, I think we did. Gosh, Fairway, I think did $79 billion last year.
Okay. Yeah. Major player
2020,
in the residential market.
Yeah.
Yeah. Yeah.
So
So we got low interest rates for a while,
yeah.
maybe in through 2022.
Yeah.
The Fed is committed to end.
Yeah, I do think rates will stay favorable through 2022 now that you mentioned
We're not going to have any supply. There's no major sources of supply coming on.
No. Where is it coming from?
Yeah.
I mean.
So what I think you might see, this is my opinion, and I'm not a mortgage guy.
Yeah.
You might see those multiple offers that have had 10 or 12 offers now, that might get cut down to 5.
Yeah.
That's where I see it going.
Yeah.
But that's still a multiple bid situation.
Yeah.
So tell us how you are helping your clients to win multiple bid situations.
Yeah. I mean, the biggest thing, I'm telling everybody, hey, the standard pre-approval, that's great in a market where there's a lot of inventory. When then there's a market where you're going to be competing on average against 6 other offers on average. I mean, multiple offers can be, I've seen some go, some of the realtors I work with have had them in the 40s. So, but on average about 6. So get the actual loan approved from an underwriter so you can waive your financing.
Take it that next step beyond just having a piece of paper.
Yeah, just a
Somebody
pre-approval.
wrote some stuff down.
Yeah, they're gonna need to waive financing most likely to get a house now.
Let's talk about that.
Yeah.
Because that is something that I'm a huge no-go on that.
Yeah.
But in order to be competitive, if you want to play ball, this is how it's done.
Yeah. Yeah. If they're a really solid buyer and they come to me and they haven't been approved yet and it's a conventional loan and they've got a nice down payment of 20% or more, I'll go sometimes give them my blessing to waive financing without being approved. But I always say, don't lose your job. Don't go out and buy anything.
Don't go buy a car.
Don't change anything.
Yeah.
And you're fine.
Don't get a new credit card.
But otherwise, I like them to get actually officially approved, especially if it's jumbo. Jumbo for sure.
Have you had any of those backfire on you where you gave your approval and said,
no, I haven't.
Yeah.
No.
And let's break this down for people who aren't quite familiar with the process.
Yeah.
So if you're in a multiple bid offer situation and there's 10 offers on the table, one of the things you can do is waive a lot of the contingencies that you would normally have.
Yeah. You got the 3 contingencies: inspection, appraisal, and financing.
And so buyers are waiving all 3 of those.
Yes. Yeah, no, it's good when the seller orders their own inspection, because sometimes sellers will order their own inspection so they can review that. All the buyers can say, hey, this home's already been inspected because the seller's paid for it. In some cases, the buyer will pay for one up front before they make an offer.
You can do a pre-inspection. That'll happen.
Yeah.
My issue there is you don't know that inspector.
No.
Is that guy good?
Yeah,
you don't. Good?
Yeah, you don't.
You don't know. So you are taking the word of somebody you don't know.
Yeah.
Instead of having your own person in there.
Yeah.
So
it helps if the inspector is well known and the realtor knows him. Like your realtor that's representing you knows him. That helps. Right. Doesn't always happen, but
yeah. And so you're buying a house that you don't know. Mm-hmm. You haven't had a chance to check it out. It's like buying a car sight unseen.
Yeah. And buying houses sight unseen, people are doing it left and right. It's crazy.
And that makes me super nervous, just from a protecting buyer standpoint. And then down the road, buyers will sue sellers. So it's both buyers and sellers.
Yeah.
And that's just me doing this for a long time, seeing, shadows where there aren't any. But there's going to be some of that.
Yep.
Hey, you remember that deal we did 3 years ago where I accepted your building inspection? Your building inspector missed this.
Yeah.
We're not suing you.
Yeah. Yeah. That's true.
We think that you did some funny business because this is so obvious of a defect.
Yeah. So what you're saying is if you're the seller, let the buyer get their own inspector.
Get a pre-inspection.
Yeah. Pre-inspection. Yeah. They got to be quick though. They got to be quick because this is moving so fast.
A few days.
Yeah. Like 3-4 days.
House comes on the market like on a Wednesday.
Yep.
And then maybe the next Tuesday, all offers are reviewed.
Yeah.
So you got to get in and get your inspection done, make all your
And that's
decisions.
what they say, if they leave an offer review date, but sometimes they get a big fat offer on a Saturday or Sunday and they're like, oh, we're just moving on.
Yeah, because the real estate agent on the listing says, we reserve the right to accept.
Yeah.
And if you get like what I call a make me move offer.
Yeah. Zillow used to have those make me move.
Exactly. Yeah. And unless, so, I mean, if there's a big enough number in front of you, you're going to kind of sit there and go, whew.
Sure.
And I've advised some of my real estate brokers on the Summit side, hey, take that.
Mm-hmm.
That meets your client's goals.
Mm-hmm. Mm-hmm.
Your objections, your what you want to get done is done.
Yeah. Yeah.
Beyond that, you're just greedy.
They just have to make sure, hey, what type of financing is it? Is it all cash or fine? Is the buyer putting down 10%, 20, 30? Because you want it to appraise, because sometimes these properties won't appraise. So
that's something that on the appraisal side, we are seeing that pretty consistently, right?
Yeah.
Can't get there.
Yeah.
So we're seeing low appraisals.
Yeah. And I would imagine that's just starting to crank up more so than it was earlier in the year, at least. I don't know.
Recently, very much so, because so much of the stuff we're seeing is so far above list price.
Yeah.
And list price was high to begin with.
Right.
And we don't have the data to support these higher prices.
Mm-hmm.
And so, my appraisers are like, I'm $200,000 off of, contract price.
Mm-hmm.
I'm like, do the best you can.
Yeah. There's only so much you can do.
There's only so much
you can't make
do.
up data. So.
No, because people are so euphoric over the housing market. I want this house.
Yeah.
And they're making bids on stuff that's way beyond reason, but that's what it's taking to get a house.
Yeah. Way beyond reason.
Yeah. So I kind of view it as, musical chairs.
Yeah.
You don't want to be that last guy. Oh, where's my chair?
Yeah. Yeah. It's interesting times, but I think coaching up first-time homebuyers in particular that haven't owned a home before and saying, hey, if you're looking at a house for $700, if I pre-approved you for $700, don't be looking at houses for $700 because you're not going to get a house.
Be looking at
$6. Be looking at $6.
Yeah. And that's a hard lesson to learn.
And the realtors most likely are going to tell their clients, at least the ones I work with, they're experienced realtors. They're going to tell their clients that, but they need to hear it from me too.
Right. You got to come at it from all angles.
Yeah. Because that's the reality of it.
And that's a hard lesson to learn.
Yeah.
I can afford this, but I got to I got to start at this. This makes no sense.
Yeah.
What are we doing here?
Yeah. Yeah. Because
one of the other things that I've seen that I thought was interesting, I did a podcast on veterans basically being pushed to the sidelines because nobody wants to accept their offer and need to pay closing costs
which is a shame, because VA loans, if they qualify, they're not that hard to do. I mean,
because the government's guaranteeing it.
Yeah. I mean, if they're putting zero down, yes, you can worry about the appraisal if they're putting zero down. But there's clients that'll put 10, 20% down on VA loans, and then you're not so concerned about the appraisal. But the number one thing that I hear is zero down, VA, we don't want to accept the offer because it might not appraise.
Unless the VA buyer is asking for those closing costs.
Right. Most of the time that I do a VA loan, they're not asking for closing costs.
Okay.
Most of the clients that I have, they do a VA loan zero down, they can come up with the closing cost. And some of them have, like I've done a couple VA loans this year where they're putting 10, 20% down.
And that's the other big issue is with veterans. A lot of times they start families early and they're not getting paid a ton of money. So they don't have big down payments to put down.
Yeah.
And yet they're doing service to our country.
Especially if they're active military. Usually they're doing zero down.
Right. Yeah. Usually they're doing zero down because they're spread thin.
Yeah.
And that's just the deal. And so in this market, they're getting hammered.
Yeah.
It's so hard for them to compete.
Yeah. It's unfortunate because they really do deserve what they're
housing.
Yeah. They deserve to get a house. And I think if you're a seller and you have a veteran, you should really consider their offer. Yeah. And not just be scared of it, because most of the time they do close and they do appraise, knock on wood. I haven't had one VA appraisal come in low in years. I can't remember the last one.
You probably also haven't done that many.
No, I haven't. But I mean, I've only had one appraisal in this market come in low, and that was in a very rural area, and it was $7,000 under asking, and they were putting 20% down, so it didn't matter. And a $500,000 home, $7,000 under asking, and it was out in the middle of nowhere.
Yeah.
So
of all the trillions of dollars of money that our federal government is spending on all kinds of ridiculousness, I wouldn't mind if they kicked a little to the vets,
right,
and said, "Hey, guys, go buy a house, figure this out." I'd have no issues with that.
Right.
But that is not a popular opinion.
No.
In today's market.
Unfortunately, no.
Yeah. Yeah, it's kind of like saying, let the cops go, zero down.
Yeah.
How far do you think that'd get?
Yeah. not so far these days. Not so far. Yeah.
No, crazy. So one of the things that I talked about was in the labor market, something that's going on that Montana has addressed recently where you live is getting rid of the $300 a week federal unemployment kind of bonus because the labor markets are getting so tight because so many people are kicking back, taking that $300 or whatever.
Yeah.
And there aren't enough people to fulfill the jobs.
Right. That's a problem.
Yeah.
So, I mean,
and Montana was one of the first.
Yeah. Governor Gianforte was one of the first ones. I know some other governors have followed suit, but they basically they want to have the economy strong, right? We want a strong economy and people working, and we're coming out of that COVID fog and there's tons of jobs out there. Montana's wide open, for instance. Florida's wide open. Texas wide open. So there's tons of jobs out there and people are making, these younger people, say 20 to 25, 30 years of age. They're making, $1,400-$1,500 a month by sitting at home. They're like, this isn't so bad. I can go skiing or,
Do you think they're sitting at home and researching jobs?
No, I think they're doing this right here.
They're playing the Xbox.
They're playing video games and stuff. Yeah. Yeah. And so Joe Biden was giving all this money, right? And Gianforte is like, nope, we're not taking the money anymore because we've got a ton of business owners and restaurant owners and that are full swing and need help and can't get it.
Can't get it.
So
everywhere I go here in the Seattle market, there's help wanted.
Yeah. Yeah.
So if you want a job, there's no excuse. You can
get a job now.
It's just people don't.
Yeah.
They don't.
I know a ton of my kids' friends are like, man, I'm making $1,600 a month. Living in California, and I don't have to do anything. And they might make less if they go back to their job in some cases.
Right, and then they have to work.
Yeah, and they have to work.
Less Xbox.
Yeah,
crazy.
Exactly.
So on that note, how many millennials are you seeing buying homes? What percentage are you seeing? Because I know that's a big percentage of the home buying population now.
It's a large percentage.
So how many are you seeing come through?
Oh, it's over 50%.
Wow.
First-time home buyers?
Yeah.
Yeah, over 50%, I would say, are under, and I don't know where the cap is as far as age, but under 32 years of age, I would say.
The oldest millennials right now are turning 40.
Are they? Oh, jeez.
Isn't that crazy?
I'm getting old.
Yeah. Getting?
Yeah.
You've been old for a long time.
Yeah, man. Oh,
and you're younger than me.
I know.
So,
I know.
Yeah.
I just hit 50 a couple weeks ago.
Yeah. A happy 50. Did you really?
Yeah.
I
got a few more wrinkles now after that.
No, you're tan. So yeah. Well, congrats on 50.
Oh, thanks.
Yeah, that's a milestone.
I know, it's wild.
You're on the back 9 now. Yeah.
The back 9 exactly. Yeah.
So you're seeing large numbers of millennial home buyers.
Oh, yeah. If it goes up to 40, yeah, it's a huge. I'd say first time home buyers. Most of them are, almost all of them are first-time homebuyers are millennials. I would say, and then as far as just home buyers in general, you couple that in there with people over that age, I'd say probably 2/3 are millennials.
And so in these super expensive housing markets like Seattle, where you got to have a decent sized down payment to make it go.
Yeah.
What are millennials doing to get into that?
It's tough if you don't already own a home you're selling, right? Because if you have a home you're selling, you could be walking away equity with $300K in equity or whatever. Yeah. So if you don't have that, they're putting 5, 10, 15% down. A lot of them do have 20%, believe it or not. Not a lot, not all of them, but mom and dad got some money.
Yeah.
Maybe they got a good tech job. They're working at Amazon, Microsoft or whatever, and they get some stock.
Yeah.
They sell that stock. They use that for down payment.
Yeah.
I'd say it's probably averages around 10% down on my loans.
Okay. So that kind of goes to one of my theories, which is the rich are getting richer.
Yeah.
People who are already in that.
Yeah.
They're going down that road.
Yeah.
And maybe mom and dad did help them. They've got money.
Yep.
They're working at a job that's a good paying job because that's how they can afford the monthly nut.
Yep.
Other folks, other millennials, not so much, not as advantaged.
No.
What are they doing?
Roommates. I mean, they get a cosigner Sometimes they'll get a cosigner. Sometimes they won't get a cosigner, but like a couple of my son's friends have purchased homes and they just, they know the payment's tight, but they qualified for the loan, but they don't want to be broke. So they get a roommate.
Okay. Super
Hey,
smart.
it's $800 a month. You can live here with me. We're buddies.
Yep.
At least for now.
Right. Yeah. Right.
You know? So they're doing some, they do that a lot, millennials.
Until that girlfriend becomes fiance, becomes wife.
Yeah.
And then they go down that road.
Yep.
But folks who aren't working those crazy good jobs.
Yeah. If they're single and they're not working and maybe they're making $5,000 a month or whatever, they can't buy as much. You know, they're buying a condo for $350 or $400,
right.
You know, cause you can't get it in a lot of
I'm talking about the guys making $3,000 a month.
Oh, they need, multiple borrowers, 2 or 3 borrowers on there.
Yeah.
Or parents to co-sign.
And if you're making $3,000 a month, oftentimes you don't have great credit.
No.
That's where
tough.
we've got this whole division thing going on. People doing it are going crazy. People not doing it are, not accelerating at the same velocity.
No, not at all. At that income level, that's tough. I mean, you got to have at least another roommate.
You got to make some money.
Yeah.
To buy a house.
Find a different career. Yeah.
Right.
Yeah.
And it's so easy for us to say that. Why don't you just get a different career?
It's not easy to do it, but it's easy to say it. You're right.
Yeah. Yeah. And that's where I think we're seeing kind of really, to me, it's the rich are getting richer and the poor are getting poorer.
Yeah. I'd say there's a lot of that going on.
Yeah.
And that's, and some of that comes down to, we could get into politics obviously, but education, being educated, you don't have to have a college degree to make good money, but whatever it is, whatever field you want to be, if you want to be an appraiser, you want to be a mortgage lender, you want to be a realtor, you got to set some goals and have some motivation.
What about a professional YouTuber, Dan?
A professional YouTuber. I mean, I've done some of those guys' loans. They can do well.
Yeah. If you've got the income stream that you can prove.
Yeah.
Hey, this guy's making good money.
Yeah.
Here he is.
Yeah.
I mean, he might get deplatformed, but, but
YouTube might say, forget you.
You're out of here.
Yeah.
But that could be, you could say that about any employer.
Sure.
Any boss might do that. Yeah. So it's a matter of skill set.
Yeah.
In today's market.
Yeah.
And if you don't have that skill set.
Yeah. And then if you're self-employed and you're not showing enough taxable income, you're not going to get a loan either.
Right.
So you got to show income.
Yeah.
It's kind of like you can make $100,000 a year. I make $100,000 a year. Yeah. Your tax return says you make 30.
Yep.
So
Because you've written off all the rest is expenses.
Yeah. That's great for your pocketbook, but it's not great for getting a mortgage loan.
And so much of what we're talking about right now is what happened after the Great Recession with lending standards. And that's where we are so different with today's market than we were back in 2006, 7, and 8.
People ask me, is the housing market going to crash?
Yeah.
Well, if it goes down, it's not going down like it did last time.
No.
Because they gave away mortgages to anybody with a pulse.
With a pulse.
Yeah. They don't do that anymore.
No. Yeah, you can't get those mortgages.
No, you can't.
Yeah, those were the liar loans.
Yeah, they're long gone.
Yeah. Yeah.
Zero down liar loans. They were.
Zero down liar loans. Yeah.
Insane.
Yeah, those were crazy. I remember we'd roll up and we'd be meeting buyers at homes they were buying or had just bought. Like, how are you affording this?
Yeah.
This makes no sense at all. And it didn't.
Yeah, no,
at the end of the day, it didn't. So Dan, we talked about millennials kind of on the front end of buying stuff, talking about baby boomers selling their home.
Yeah.
So this is a question that I have come up pretty often because in our demographic, we've got a lot of guys that are looking at retirement. So when do they hit that exit button, pull that parachute and go, I'm out?
Yeah.
How do you recommend that? How do you,
a lot of it just depends on that person. Are they going to retire or they just want to have a smaller mortgage? Because a lot of people just want to have, hey, I want less bills. I don't want to have that, $700,000 mortgage loan or $800,000 mortgage loan. So they
going into retirement.
Yeah. So they sell and maybe they've moved somewhere and they downsize because the kids are out of the house, They don't need, or maybe they go into a condo. Yeah. They go into a townhome or condo.
Yeah.
Or they're moving out, in the, the country, so to speak, and, people are leaving California, they're leaving Seattle, leaving, places like that and moving to, Arizona, which is less expensive, Montana, Idaho, Texas, all less expensive areas.
Right. Right. And yet in Seattle, we've still got a net in-migration because of our
because the economy is great here.
Yeah.
The tech industry, the Amazons, the Facebooks, the Googles, all those companies.
Yeah. And that's still the bottom line in California.
Yeah.
Silicon Valley.
Yeah, for sure.
That's where all those companies are.
It's nuts there.
It's nuts there.
I talked to a client yesterday who could live either place. Works for a tech company. I won't mention who, but he works for a tech company we've all heard of.
Yeah.
And tech entertainment actually. So
okay.
And he can live either here or there, and he's talking about a house for X amount of dollars in the Bay Area, which is still $1 million over what he's looking at here, or he's looking at here for $1 million less. And he's trying to decide. He's going to make a decision in the next couple of weeks, but he makes enough money we could afford either market.
Okay. And that's some of the questions that I'm getting are sellers looking to sell. Hey, what advice do you have for me?
Check with your tax advisor on taxes if you're going to pay cap gains, because if you're selling and you're married and you're going to walk away with over $500K in equity, you're going to pay cap gains.
Right. But those are pretty minimal relative to your ordinary income tax rate.
Right. That's the less.
Probably going up.
Yeah. Probably going up next year, unfortunately.
Yeah.
So those are things that they got to look at. And then just overall budgeting, what they want for a mortgage. Do they want to pay it off in 30 years? Do they want to go back 30 years and do a 30 year? Do they want a 15 year? Yeah, those are all really big decisions. And then they're also kind of looking, all right, if I hold on to this home for another couple of years, got that appreciation, can we count on that appreciation? Like what should we put in there for appreciation? I know. I think it's a great time to be a seller. Best time in my 20-year career now to be a seller.
Yep.
2021.
For sure. But then the big question then after that, once you sell, where are you going to go?
That's right. Well, a lot of people are coming to Whitefish, Montana, unfortunately.
They're going to a lot of those communities, aren't they?
Yeah, they're throwing their money around like it's nothing.
Right. And same thing down in Arizona. We're just seeing that across the board.
It is crazy.
Yeah. And super active real estate markets. Yeah. So these are all things that, I talk about, and we don't have a crystal ball, but I think for the next year or so, what we've talked about on this podcast is probably what you're going to see.
Yeah.
One of the funny things before the Rona hit was I did a podcast before I started daily podcasting, and it was the 4 things that could derail our real estate market. It was one of those things. It's like, what is that?
And that was before it hit the U.S.
Yeah.
Wow.
Yeah. And it was a handful of other things. Interest rates going up, this virus coming out of China, this weird virus coming out of China.
Yeah. You know what's interesting? You say that. My wife read about it. She goes to the store and she gets these N95 masks and goggles. And I walk in the house and she's wearing it. And she's being funny. She's joking with me. And she knew about it. And she prepared and she went and got that stuff. Of course, now she doesn't want to wear a mask. She hates masks. But, but that was like back in January of 2020.
Yeah. That's about when I did the podcast. But the thing is that even though we had this pandemic, real estate has gone bonkers.
Yeah.
It's the weirdest thing. I mean, if you would have told me 10 years ago that, hey, we're going to have this worldwide pandemic, it's going to kill XYZ number of people, what do you think will happen with the real estate market?
Yeah.
What would we
I wouldn't have forecasted would happen.
We would have said it would tank.
Yeah.
That the market would die.
Yeah, because people would not have money to spend.
Right. And they wouldn't want to.
Yeah. They'd want to hunker down, save their money.
In place, nobody even thinking about real estate. Mm-hmm. And yet it's had the opposite effect. It's had this massive magnification on real estate. Yeah. It's one of the industries that's done phenomenal. It's just
we had record years. If you're a lender like myself or a real estate agent, 2020 was a record year for you.
Yeah.
And we did really well. You did really well.
Everybody did really well in the pipeline.
Yeah.
And that's why I'm kind of sitting around going, this is weird.
It is weird.
It's crazy.
Yeah. It's just,
but I think it's going to go a while longer.
Yeah.
As weird as that sounds.
Yeah. I mean, it doesn't, I know obviously people are getting vaccinated and that's a whole nother topic, but I mean, we're having a slowdown of the spread of the virus, but if it picks up again and goes back, hopefully it doesn't, but if it does, it's going to be really interesting.
Yeah. I think it'll be interesting either way.
Yeah, for sure.
Stuff's happening.
For sure.
Dan, thank you so much for coming on.
Thanks for having me.
I appreciate your insight, and it's always good to talk to you and kind of get your perspective on what's going on, because so much of our market right now is driven by these interest rates.
Yeah.
And kind of the value that you bring as far as you being on the front end.
Yep.
Because the rest of us, we kind of go, oh, interest rates are about here. And that's if you even care. And most people don't.
Right.
But that's what's driving the marketplace.
Yep, absolutely.
So for people to have a kind of a little bit of a, judgment, a little bit of a background on that, I think it's important. So thanks so much for coming on.
Yeah, thanks for having me. Appreciate it.
So we'll probably see you again maybe in summer.
In the summer, probably July. Yeah.
Okay.
Yeah.
Cool. Look forward to it.
Okay.
Thanks for being here, Dan.
Thank you.
Yep. We'll catch up soon, guys. Bye for now. Don't forget to subscribe to our channel and hit the notification bell so you'll know when our next video is out.